Welcome to Classic Value Investors. My name is Mariusz Konieczny, and second time about the tanker thesis. I have Kuppy with me on the line. Kuppy, thanks a lot for doing this again.
Happy to do it.
Yeah, so to say that the last 8 weeks or so has been a roller coaster is probably an understatement. But the first question I have to you is, okay, so since your Real Vision interview, how has the tanker thesis evolved? In other words, which things happened as you predicted, and which things didn't, or maybe didn't to the magnitude that you were expecting them to happen?
Yeah, sure. I guess let me start by just a quick disclaimer. Tankers are volatile. Tankers are probably more volatile than almost any other sector. If you didn't know that, you didn't do your research. And if you don't expect them to be volatile in the future, you're gonna, be surprised. Part of the reason I love tankers so much is because they are so volatile, and it gives you great opportunities. So I guess going to your question about my thesis, honestly, it's playing out more or less like I thought it would. I know this isn't reflected in the share price, and we're in the game of getting paid, not getting our thesis right. But I back when this whole thing first started, when the COVID lockdowns were in their first couple of days, it dawned on me that there's going to be a huge glut. And the only way you could store that glut was on tankers. And back then, people were talking about a million, maybe 2 million surplus. And I came out with the crazy number of saying it would be about 2 billion. And my math was we do about 20 million a day for 50 days, and then 100 days of 10 million. And it turns out I got it sort of right, sort of wrong. But when you're totally out in 12 sigma land, you're not going to get it all right. It looks like we actually built more than I expected in the first 50 or so days. Looks like the number, and they're going to still reconcile this for another year or two, but it's north of 20. It might even be as high as 25 for a 50-day period, which put a lot of oil into storage. And we saw these articles and people freaking out about what to do with all the oil. And then uh, the world started opening up again. And instead of doing 100 days of 10, at least the first 30 days or so, it looks like it's more like 5. And so we're not going to hit 2 billion, I don't think, unless there's a second wave. We're probably going to top out somewhere between a billion five and 2 billion. And I don't have any better accuracy than that sort of figure because we just don't know what the tail looks like. Some states are opening here, some aren't. Some countries are dramatically reopened. Some countries are still locked down. Some industries like airlines are still basically doing nothing, and others like gasoline demand are recovering quite rapidly. But it looks like we're going to do somewhere between a billion five and two. And I give myself kind of, I guess, an A minus on my thesis there. Um, and then in terms of what charter rates did, look, we had a 2 month period where charter rates stayed at all time highs, and these companies made a just phenomenal amount of money. Let's take a look at a company called TK Tankers because it was $13, let's say, when I started talking about this thesis. Um, and with 33 million shares, you're looking at what's called a 400 million market cap. In Q4, they earned 100 million of cash flow. Q1, they just reported they did about 150 million. And it looks like Q2, which is going to take in most of these excess profit period, they'll do almost 200 million. So you're looking at a company that will do about 450 million on what is a little over 400 million market cap when I started this thesis. If you find me a stock that's going to earn effectively its market cap and you make that call, it's pretty impressive when you get it right. And I'm pretty proud of myself. So maybe stop there and let's talk about the looking backward side and let's look forward because this wasn't a thesis where I said, these are going to 10 bagger tomorrow. I think you have a long period of time, let's call it 3 years or so, where this excess storage and this glut works its way through the system with surprising effects, and that sort of volatility will keep rates elevated. And you're going to have a fleet of tankers that is going to earn excess profits, abnormally high returns on capital, and hopefully do something intelligent with that capital.
So from what you're saying, you're saying that it will take some time to work off that inventory that we just built.
Oh, Of course.
Now,
Uh,
do you mean both the inventory in the floating storage and the land storage?
oh yeah, absolutely. I mean, look, I think we're going to hit equilibrium. Look, we're still right now building a few million barrels a day. 3 to 5 million is my best guess, but I don't really know. It's somewhere around there. I think we're going to keep building for a very long time. If you look at the supply number, we're 90-ish right now, 89, depending on how much OPEC's cheating. You look at the demand side, we're in the mid 80s, low mid 80s. There's a build coming, and as things open up and go back to more normal, I think we'll hit equilibrium sometime in Q4. But equilibrium is probably going to be around 90 on both sides. And I don't think we're going to work this storage of 1.5 to 2 billion barrels down for a very, very long time. If you look at the last glut, which is 2014 to 16, even in 2019, we hadn't worked it all down. We actually only worked about half of it down. This one, I don't think we're going to work down for a very, very long time because I think we're going to be roughly equilibrium for a very long time. And so I think you're going to have this glut on land, and that's going to also create gluts in seaborne because seaborne is kind of like your swing capacity, and it's the most efficient way to move products around. And I think you're going to learn that as you start refining some of this glut that was built up. Refineries aren't going to have the right crude grades they want. They're going to have to move stuff around. It's going to create a lot more disruption, which is very good. And even as they work this all down, it's going to be super slow. 1 million, 2 million a day. I mean, you're talking about multiple years to work this down, and some of that oil is going to stay seaborne. Actually,
Hmm.
probably a good chunk of it does.
Yeah. Okay, that's interesting. Uh, you know, um, uh, we're listening to like the frontline conference call. It appears it appears that the thesis kind of like shifted to what you're saying, and what I mean by this, be, before this whole thing started, um, I, I I guess before the thesis was like, okay, there's gonna be this big contango, it's gonna keep on growing, and then all of a sudden the frontline CEO, they started talking about how we're going to start now going the other way and start working it off. And I guess it could have scared some people. But here's the thing that I have a hard time understanding, because there were some articles they were talking about destocking, and this is going to be really bad. But let's say you're the producer, and I'm the refiner, and I buy crude from you, and some people are saying, okay, well, I'm not going to buy a lot from you because I have a lot in storage. So, like, what are you going to do as a producer? Are you going to, like, shut down and be like, you know what, I'm going to wait for you until you work off the inventory, and I'm going to stop production? I don't think so. I think you're going to keep producing, and you're going to try to find other buyers and discount the price until you find some buyers. So, I mean, am I getting you right? It seems like the floating
That's how I
storage is
see it.
still gonna. I mean, you're not gonna. If you didn't stop when the demand completely stopped, you're gonna. I think that the contango might actually return, even though the contango is not like super important. I mean, am I getting it right?
Well, the contango is important because even if there's only a 1 cent contango, it incentivizes people to store on vessels. And I'm not saying the Vitals of the world go out there and store 1 million barrels and earn the spread. I'm talking about Exxon and Shell that have no incentive to rapidly draw down their stocks because their stocks are worth more tomorrow. It's vessels slow steaming. You have lots of things in play, and look, depending on whose math you want to look at, 10 to 15% of the global fleet is right now storing oil.
Mm-hmm.
And the question is, what is storage? Is that a vessel that's stopped moving for a day? Is that a vessel that has stopped moving for 30 days? But that's an abnormally high percentage of the global fleet that is not out there competing for charters, which is going to keep charter rates elevated. And I think you're absolutely right. If you're Nigeria, you need dollars. You have oil. You produce oil. You don't need the oil. So what are you going to do? You're going to comply with OPEC for a little bit and then start cheating. And we are at the point now where everyone's starting to cheat. I mean, look at the Arabian Gulf loadings for the last week of May or the first week of June. They're all cheating already.
Mm-hmm.
And the issue is if you're, somewhere in the Gulf, you need dollars because your social programs, you have, your own expenses, you have your, Swiss bank account you stash money in. You don't need oil, you have oil. So you're going to still export. And so I think these OPEC cuts are artificial and not sustainable. I think that they will reduce the cuts as demand comes back. You're going to stay at this equilibrium. And I think you're going to see a lot more seaborne exports of oil, which is going to push charter rates higher at a time when a very good chunk of the fleet is still stuck storing oil. I don't think you ever draw down this inventory. There's a lot of reason to think you might actually keep increasing the inventory. And then let me just add one other thing, and this is looking ahead a year or so. But if the U.S. is going to produce less, which seems likely if oil stays at 30, the U.S.'s demand will eventually come back to the prior levels, which means we have to get our oil from somewhere else. And most likely, we're going to be getting oil from really far away in the Arabian Gulf. And for every million barrels we import from the Arabian Gulf, you're going to take 60 VLCs and put it into that trade pattern. So it's going to lead to dramatically higher charter rates as people realize that the United States is going to produce less and import more. And look, the Saudis didn't take oil to negative just for their own entertainment. They have a long-term plan here, which is to kill shale and export more oil to us. And I was looking ahead a few years, but that's the ultimate bull thesis, and this is all going to happen at a time when 10 to 15% of the global fleet is stuck storing oil still.
Yeah. When this whole sell-off was happening, uh, yeah, two questions that I have about you. Like, what was going through your head when it was happening? And also, the other thing I wanted to say is, I think it was like a week ago, you went on Twitter and you said that it feels like the bottom of the pullback might be over, and it looks like you were like, right almost to a perfection for that short-term call. Like, what made you want to make that call?
Well, in terms of the pullback being over, look, I built a blog. It actually started more as a way to stay in touch with some friends and, you know, do a big copy all on an email. It was just easier to write it on a blog. And over the last decade, I've picked up a lot of readers. And when it came to tankers, I don't know why, but I picked up an unusually large number of people that bought tankers. And then they started panicking every time there was a down 10% day. And, tankers have a down 10% day almost every day or up 10%. And so I just saw a lot of email volume coming in. And I actually had a lot of my friends who run funds and they got tanker exposure because the thesis is very solid. And when tanker rates started pulling back and the share prices collapsed, all these people started panicking. They kept asking me, Kuppy, what do you do? Kuppy, what do you think? And I kept saying the thesis is working out just like I thought it would. 200,000 a day isn't sustainable. I think everyone knows that. You can't pay a third of the value of the cargo to transport it. It just makes no sense. So, and I kept saying, we're going to pull back and we're going to normalize. And everyone started looking at the week over week and panicking instead of looking at the year over year, which, even at the bottom last week was still very, very attractive year over year. But I went from having, I don't want to say an exact number, but I went from having an unusually large number of emails and phone calls and texts to almost nothing. And for 3 days, I had no one, not one person reach out. And it just made me think all the tourists are finally out. The guys who own it, like me, intend to own it because we see it. And the people who thought it was a fast trade, they were going to sell it to someone else up 30%, they're all gone. And it seems like that's the case. The shorts leaned into it quite aggressively. I mean, a lot of these companies grew 1,000 basis of short interest in a 3-week period. So the shorts leaned in aggressively. A lot of my friends stopped out or tossed it in. And I just felt like it was kind of a sentiment bottom. I've been trading for 20 years. And you kind of just get a feel for these sort of like waves in the ocean of sentiment. And it just felt like a sentiment bottom. In terms of how I was feeling, quite honestly, I know what I own. I know the value of these things. I know how much cash has been created in just a very short period of time. I know what the balance sheets look like because they've really been totally reconstructed in terms of retained capital. And I just know what the long term thesis is, which is that this storage trade is going to keep going. The contango is going to fluctuate month to month just based on supply demand and trader positioning. But in total, contango is going to absorb tonnage, and like I said, I think this is playing out more or less like I expected it to.
Yeah, yeah, interesting. It seems to me that after this sell-off, um, kind of logic is slowly returning, because as you said, what TK did, and just today, like in my account, the dividend from DHT Holdings hit my account, and it's real money, and the dividend from Euronav and Frontline, hey, they're all coming in June, so it's not fake. I can use that money to buy something else or more of the same.
Right. And look, these dividends, I think the dividend policy from a lot of these companies is pretty dumb because no one's going to value the dividend if it fluctuates quarter to quarter. I think it's better for them to have a fixed dividend of, whatever the number is, and then use the rest of it for share buybacks or deleveraging or even growth. I don't think anyone gives them value for it, but it's pretty amazing when you look at something like Euronav that's trading at $10 and I'm going to get almost $2 a share for the first half of the year. It's an unusually large yield to be earning, and it's part of the excess profits they've earned for the last really 9 months. And what their confidence is that these earnings will be sustainable going forward, which I think is very likely, actually. Um, I don't really look at this day to day because it'll kind of make you nauseous. But I just know what I have and I know what the rates are going to do. And it does seem like rates are now recovering a bit. And I expect rates to probably hit a new higher equilibrium level. If you just think about this logically, the Saudis sent Armada our way. And once they hit the Gulf, they were all looking for loadings, and the Gulf just isn't exporting that much, so they had nothing to do, and they traveled the world looking for loadings in funny places, and it depressed prices quite a lot. And pricing is now coming up as we go through that glut of tankers. It's something I've told a lot of my friends I expected to happen, and just in the last 48 hours, we've seen a bunch of charters signed at world scale 60 or better, which is quite a nice uptick. And I think we're going to hit a new higher equilibrium. I don't know where that is, and rates will continue to earn phenomenal amounts of money for these tanker companies. I think people got so used to seeing 200,000 that they forgot that 50,000 is a really good number. 75 is better. And if you are getting even just 50,000 a day, you're earning really high returns on capital here. I mean, you're basically getting somewhere around 40,000 a day of NOI before interest and depreciation, and you're that vessel, let's call it a 10-year vessel, is worth, let's call it 50 million. You need about 20 million to hold it, and you're looking at a 50 ROE. I mean, find me another industry you can earn a 50 ROE.
Right, and then the rates um, that they were getting in the fourth quarter and first quarter, which generated these huge returns. I mean, they weren't 200,000 rates.
Well, there were some charters signed there, but I mean, a lot of them were signed lower. I think what people miss with tankers is it's a leasing business. Okay, so if I have an office building and I rent it to you, I have visibility for many years into the future, which lets me put a lot of leverage on it. Which because of the visibility, I can lever it up. But at the same time, I'm going to be earning a low, mid single digit sort of yield on my capital just because there's a lot of capital chasing it, and people miss that in tankers it's very different. You have periods of time where you break even or you maybe even lose money, and then you have periods of time where you make true excess profits, and it's those periods of time where you make excess profits where you earn the value of the vessel. And during those periods, you really can make a lot of money. And we just saw one of those periods where for 7 out of 9 months, tanker rates were just off the charts. And I really do think because of the floating storage, which is, you know, my original thesis that it would type a lot of vessels, I think these rates just stay elevated for a very long time. And I actually think we're going to continue to build floating storage for quite a while.
It's interesting that you said that tankers are like a leasing business, and I should have remembered. I forgot that you know about commercial real estate because of your Mongolia investments. And yeah, I mean, I have a background in commercial real estate. I used to be a commercial real estate broker, so I know exactly what you're talking about. But yeah, it's a good way of thinking about it. Commercial real estate, they might have leases for, you know, 2 or 5 years or whatever. Apartments tend to have shorter term leases, but tankers are, I mean, they could have a 1 year lease if they are chartered, but you know, they're shorter term leases, but it's still a leasing business.
Right. And I think people look at, say, an office REIT and they go, okay, I'm going to value this based on funds from operation, or I'm going to value it based on the dividend yield because they all have roughly the same payout ratios. And that's how they value it. So they're looking at it on a cash flow basis, which, the cash flow is just, it's the cap rate with some leverage on it. It's kind of, you can work it backwards to what the valuation is, and then you can figure out, what the NAV is. And usually there's a multiple on that NAV, either discount or premium. With tankers, people keep looking at the dividend, or they keep looking at this quarter's cash flow, or even this day's cash flow based on recent charter rates, and they're missing out on the fact that it's a financing business. It ought to be valued on NAV. It's as simple as possible. It should trade at a premium to discount to NAV, depending on what you think will happen to charter rates going forward. Because with tankers, charter rates could be below the OPEX, and you could lose money. And if you're in a situation like right now where there's a very strong reason to think charter rates create excess profits for the next few years, then it should probably trade at a premium to NAV. Which is why I feel so confident sitting here on the beach. I'm on vacation. I've been on vacation for 2 weeks, because I know that I'm buying these things, or I own these things at somewhere between a third and half of NAV. The NAV is building every day, and they ought to trade at a premium to NAV. And until that gap gets closed, and I don't want to say what my guess of premium should be, I'm pretty confident just sitting around and waiting. I should add though that tankers have very high implied volatility. When we hit the upper Bollinger Band, and I'm not really a technical guy, but I've always found Bollingers to be useful. I sold some calls. When we just hit the lower Bollinger, I wrote some puts, which gets me longer if I get assigned in June and July. And I'm not really trading around my position too much because I don't like paying taxes. But selling those covered calls or writing those puts is a decent way to pick up some extra yield while I get my dividends and everything else. And if you're not doing that when volatility is over 100, you're kind of missing out on a lot of the upside.
Hmm hmm when TK had a conference call, I think it was Jay Mintzmeyer that asked a question that the feedback or concerns that he gets from his a lot of the investors that follow him is that they're petrified that these tanker companies would, order new ships with all the cash that's generated. Like, what's your view on that?
Well, you have a wasting asset. A tanker lasts roughly 20 years. So if you have a fleet, and your fleet, let's say TK, which I don't have it in front of me, but I think it's about a 10-year blended average age. If they're going to keep a 10-year blended age, they either have to buy secondhand tonnage or they have to order new tonnage, just because their fleet is going to continue to age. And so it's just part of the process of having a fleet and keeping your fleet competitive. I'm not worried about them ordering. So far, they've been very shy at ordering. Most of the publicly traded companies have seen that it's more accretive to buy back their own shares at a discount to net asset value and let their fleets age a little, or to return the capital to shareholders through dividends, or just to deleverage, which increases NAV. But at some part in this cycle, they have to order, just because you don't have a business if you don't. My concern isn't so much that TK orders a vessel or buys, a 5-year resale. It's more that a bunch of PE guys show up and order a ton of vessels. I think people look at the last cycle and they miss a big piece of it. The vessel companies themselves, there were some bad actors who really ordered too much. But, you look at like 2006 to 2012, most of the ordering was actually PE firms who listed companies in an IPO with a mandate to go buy tankers. Some of these ended up with large fleets like Scorpio. Scorpio tankers really started with a mandate to buy tankers. Others of them ended up getting folded into other companies, or they just went bankrupt. But it was the finance guys that showed up that created the problem. The tanker guys said, "Hey, wait a second, this makes no sense." And a lot of the tanker guys were actually net sellers of vessels to finance guys because they saw what was coming in rates when you put 50% of the global fleet on order or something crazy like that. So I don't know if it's the guys like TK that should be blamed. You know, I'm more worried that the PE guys show up and look at the current yields and look at the fact that you can earn a 50 ROE, which is pretty crazy when you think about you can get a 50 ROE with pretty low leverage, and they go out there and order the vessels. Like that's my fear.
Okay. It's funny that you're talking about the private equity guys because one of the questions that I got was to ask some of these CEOs was whether they are concerned about private equity guys coming in and you know buying the company and liquidating it, paying off debt, and making a quick buck like this. And I'm not going to say the name of the CEO, but he started laughing because he said private equity guys only come in at the top.
Yep. They so private equity has a pretty terrible record in cyclical industries of just lighting LP money on fire, and I'm sure they will come in at the top this time as well and light LP money on fire. But if you look at what PE has done over the last 12 months, they've actually been net sellers, which is ironic because they bought the beginning, the basically the top of the last cycle, and they just sold the bottom of that cycle at the beginning of this new cycle. I don't think you're going to see a lot of PE show up. Not yet, at least.
Yeah, not at least not at least the financial statements look really good for many more quarters in a row and maybe years in a row.
Right. I mean, I'm actually surprised you haven't seen more activists show up. Just because a lot of these fleets, in theory, could operate with higher financial leverage, or at least they're could be targeted by activists demanding higher financial leverage. And I'm just surprised that you haven't seen the activists show up yet. They will eventually. Which is why I don't think you're going to see these guys go out there and hit the yards with new orders because if they keep trading at half of NAV, eventually guys will realize that you can demand buybacks or tenders or whatever it is and push the NAV up. And, you know, no public company wants to deal with activists, so they'll probably do it on their own.
Interesting. Okay. Um, all right, Kuppy. Well, thanks a lot for doing this. Do you have any concluding thoughts before we wrap it up?
No, I mean, look, when you go out there and say you're going to do when you see something that's a 10 or 20 sigma sort of event and, you get it kind of an A minus on it, looking forward 3 months, I'm pretty proud of myself, quite honestly. These companies did phenomenal cash flow at a time when everyone thought that rates were going to be the same as they were at the end of January, or early February. I think rates stay elevated for a very long period of time. Storage keeps building. We don't know where it tops out, but it's going to be higher than it is today. And, I think people may have misunderstood what I was saying about rates. I mean, 200,000 is just amazing, but it's not sustainable. And this storage thesis really is working out more or less like I expected it to. There's going to be good and bad months. And overall, you have a structural situation where a lot of oil is stored on vessels. It's likely to stay on vessels. And it's to keep charter rates abnormally high. And, I expect you're going to see a lot of these companies earning north of 100 ROE. And if you can buy them at half a NAV, you're going to make 200% on your money each year, which when you kegger that out over a few years that this storage trade lasts, you really should get a bunch of 5 and 10 baggers. And so this is more or less playing out like I expected it to. And, every day that goes on, it kind of gives me more confidence that it's going to keep playing out.
All right. Okay, perfect. Thanks a lot.
Sure thing. Talk soon.